Goldman Sachs just completely liquidated their $154 million XRP position, and while everyone's panicking, the AI models are screaming something totally different. Let's break it down. Here's where we are right now. XRP is sitting at $1.3884, up just 0.26% in the last 24 hours. Now, I know that doesn't sound exciting, but you know what I've noticed? Sometimes the quietest moments come right before the biggest moves. The market's in this weird, calm state. And honestly, it feels like holding your breath before a big announcement. Here's why this number matters. The Bollinger Bands are squeezed tighter than I've seen in months. When I say squeezed, I mean really compressed. XRP is trading just below the middle line at $1.4143. And the RSI is sitting at 45.83, which is pretty neutral territory. But here's the thing, the MACD is still showing some bearish signals with that minus 0.0047 histogram. However, and this is interesting, the volume indicators are telling a different story, with over 14 billion in accumulated buying pressure. So here's what moved the market today. Jerome Powell's term as Fed chair just expired on May 15th, and we've got a new chair stepping in. Now, you might think that's just boring financial stuff, but trust me, this affects everything in crypto. XRP has been showing some interesting correlations lately, moving opposite to the dollar index, which could actually work in our favor if the new Fed takes a different approach to monetary policy. If this passes, here's what happens. The SEC is reportedly preparing to announce something called an innovation exemption this week. Basically, this would allow trading of tokenized versions of public companies. Now, that might not directly impact XRP, but it shows the regulatory environment is slowly warming up to crypto innovations. Meanwhile, there's also talk about permanently banning CBDCs, which could actually be bullish for existing cryptocurrencies like XRP. The mood right now is, well, pretty grim actually. The Fear and Greed Index is sitting at 25, which puts us in extreme fear territory. You know what I've learned over the years? When everyone's scared and running for the exits, that's often when the smart money starts quietly accumulating. Goldman Sachs liquidating their entire XRP ETF position definitely spooked people, but sometimes institutional exits create opportunities for the rest of us. The big players are doing something interesting. I'm seeing 951 whale transactions moving over 580 billion XRP. That's not a typo. Beyond the Goldman Sachs exit, there's definitely some major movement happening behind the scenes. Most XRP ETFs are showing net outflows totaling about $37.3 million, so the institutions are clearly repositioning themselves. In plain English, we're at this stage. The Elliott Wave analysis suggests we're in what's called a C-wave correction phase. Using Wyckoff theory, we might be in a distribution phase, but honestly, the confidence level on that is only 46%, which means, well, the patterns aren't crystal clear right now. Sometimes that uncertainty itself is a signal that a big move is coming. So what does the AI think? Here's where it gets exciting. The short-term prediction, that's 1 day out, is targeting $1.7275. That's a 24.4% jump with 55.2% probability. But wait, the medium-term 7-day prediction is even more bullish at $1.7569. And get this, it has an 83.8% probability. The long-term 30-day target, $1.9344, which would be a 39.3% gain from here. That medium-term confidence level of 83.8% is pretty remarkable, actually. But here's what could go wrong. The biggest risk right now is more institutional selling following Goldman Sachs' lead. When one big player exits, others sometimes follow like dominoes. Also, that extreme fear reading of 25 on the Fear and Greed Index could push us lower before we bounce. The new Fed chair situation adds uncertainty too, and we can't ignore those ongoing geopolitical tensions in the Middle East. Here's my take. I'm saying hold, but get ready for some strategic buying. The Bollinger Band compression is screaming that a big move is coming. And with AI models this confident about upside, I think we want to be positioned for it. My primary buy level would be $1.30. That's where the lower Bollinger Band support sits. If we get really lucky and it drops to $1.25, that's a secondary buy opportunity. I'd set a stop loss at $1.15 because below that, we're in trouble. For targets, I'm looking at $1.70 first, then $1.90 for the bigger picture. The Goldman Sachs liquidation might actually be a gift in disguise, clearing out weak hands before the next leg up. That's it for today. If this helped you see through all the market noise, hit that subscribe button and give this video a like. The AI data updates daily, so I'll keep you posted on any changes. See you next time.